Hello guys, welcome back to my YouTube channel. Today we're going to be talking about trend reversal. I'm going to be using Bitcoin USD as an example. How do you know that the trend is about to reverse? What are the things that you need to look for? What are the key points that you need to know before entering the market? How you're going to be setting your stop loss, where you're going to be taking your targets. Everything is going to be discussed in this video. So without any further ado, let's get into it. In an uptrend, we always have a higher high, a lower high, a higher high, and a lower high, right? So that means high, low, it's high than the previous high, and then you have a lower high. So that means the market is going to continue. But if you look at the structure that we have here, you see that the price is kind of contracting there. See, we have a high here, we have a lower high, we have a high high, we have a lower high, and we have a high high. Now, market break the structure here. What are you expecting? That you are expecting the next candle to be a bullish candle to indicate that no, we're going to go back up. But now that you have a break of market structure, that is one confirmation. You're waiting for the market to change direction, because you're not going to be buying the trend that is already moving. You want the market to give you another trend so you can get involved in the market and then make some profit out of it. Now, we already have one confirmation here. Market has already broken the structure, creating a wick here. So what do we have? We have an indecision candle. Now, after this indecision candle, you're waiting for the market to give you the next decision making so we can continue with the trend, right? Indecision candle, price failed to go back in. Sometimes the market might rebound from here, and you might see a green candle open up from that zone here, and then the market will go back up. But what you are waiting for is that the price has been breaking out of here. I'm waiting for a retest of this trend. Once the market retests and fails to go back inside the channel, we're gonna be putting our sell position. And where are we going to be putting our stop loss? Our stop loss is going to be at the a little pips to the previous high, and then we're going to continue the trend downwards. Now, let's wait for the next candle to follow the trend. Now, failed. Price failed. This is the continuation push phase that we are looking for. And we have already seen our continuation push phase that says the price has created a low here, and then the price is kind of failing to create a new high. So that means it's not really going up. It's time for the market to reverse. Now, if the market is reversing, where do you want to take your profit? Now, you want to take your profit at the previous. Your TP1 should be somewhere here. Let me draw support here, because this is where support and resistance comes in. You're going to be waiting for the support here, and this is the final one, because we have a double bottom here. You have a double bottom here, and price might get there and then start bouncing back up. Let me change the color of this. I like it green if it is a support. I like my support to be in green color and my resistance to be in red color. So that's what we have here. Now, the market is already telling you that we're going to be going short. This is my TP1, this is your TP2. Why are we taking our TP there? You see, this is where we have the first push phase, where the market creates a high, it creates a low. This is where the market is reducing the momentum, and then now it is coming for a reverse of the candle. Now, you can enter the market from here. Let's say we're going to be entering from here. We're going to be entering from here. Where do you want to put your stop loss? Your stop loss is going to be above the previous high, because price could rebound 50% retracement before continuing downwards. Sometimes market change structure. Most of the time, all these analyses are always going to be the best that you're going to have out there. Sometimes the market change structure. Changes happen in the market. The momentum can change. You might have some news going on, and then your technical analysis will not work. But this strategy I've been working 80% of the time, and it is working perfectly, and I've been using it over a long period of time now. So now you're going to be putting your stop loss few pips above the previous high, and then you're going to be targeting here. We're going to have a 1-2-1. This 1-2-1 will be easy to capture. Now you have a 1-2-1 here, and your second entry is going to be, let me move this to 1-2-1. Okay, good. This is the 1-2-1 here. Now your second analysis is going to be about 2-2-1 here. 2-2-1. Good. 2-2-1 here. So this is how I've been trading this market, and let's see how this played out. You already have a break of market structure. we already have a retest of the market. Now we have a continuation push phase, which has given us how many entries? Breakout market structure, retest of the price, continuation push phase. We have three confirmations to get in here. Where do I put my stop loss? I already identified where I'm going to be putting my stop loss. Where do I enter the trade? I already identified where I'm going to be taking my profit. Sorry. I already know where I'm going to be taking my profit. So before you enter a market, you need to know why you're entering it, which is breaking of the market, retest and continuation. That is three confirmation. Where am I going to be putting my stop loss? I've already identified the previous high. Now, where am I going to be putting my take profit? TP1, TP2, or anywhere. If you're going to be trading stop, if you're going to be continuing with the trend, you need to know where you're going to be doing that. So before you enter the market, I would advise you to know what you're doing. Now let's see how this price played out. Let's see how this price played out. Okay, we have a continuation there. Okay, reaccumulation. Good. Price reaccumulate. Now, okay. Failed. Now, if you look at it very well, you see that price creates some sort of a resistance here. If you look at the price very well, you see price creates some sort of a resistance. I like it being red. Like I said, I like it being red. So resistance here means that price have come for a reaccumulation of price. Sometimes I get involved back here so I can go short from here because the price has already broken structure. If you look at it very well, you see that it is lower than this. So it is a high and low. If you use Fibonacci very well, you see that we are at a 50% retracement here. I'm not going to be teaching about Fibonacci here. Maybe in another video in the future, I'm going to be talking about Fibonacci retracement. Now, this is 50% retracement. You can still get in here to capture more entries if you like to. Don't do it if you don't understand the market very well. Okay, don't do it if you don't understand the market. But for someone like me that I've been in this kind of scenario multiple times, I know how to get involved in this. So I can still open an entry here for a better risk reward, and I put my stop loss above this zone area because it is a solid resistance because price is showing a solid resistance there. Now, where do you put it? The previous high. This is the highest candle that opened there. So you're going to be putting it a few pips above it, and then you're going to be targeting. Where do you want to target? You want to target the next possible zone where the price is going to bounce off from. And this is where the price is likely going to bounce off from. Now, let's continue the trend and then see how this price played out. Okay, so now continuation. So you see, few pips from here, something protected me. You see, few pips. That's why I say you always have few pips above what you have there. Now, TP1 hit, and then TP2 hit quickly. This is how you trade this kind of market. Wow. See, in front of you guys here, I just did it. If this was a live account, this is how you're going to be milking your profit. You see, few pips. See how I'm being protected from here. See what protected me. Few pips. That's why I say you need to have a few pips above here because there's going to be some fake out in the market sometimes. And market is always like this. Now look at it. Immediately price got here. It accumulates buyers from here. It accumulated some buyers from here. You see, it bounced off so quickly. So here also indicates that there's a higher chance that the price is going to bounce up a little bit. But we are not certain about that. We are not concerned about that. What we are concerned about is waiting for the market to break structure because you don't just get involved in the bull market because you look at it very well. The market is up, creating a lower high, a higher high, lower high. You don't want to get involved in that one because if you should get involved, you might be stopped out in the market and then you might get in the wrong direction. But you're waiting for the market to change structure so you can follow a new trend because the trend is gone already. Don't chase it. Once the trend is gone, just wait. Patience is the key. Patience is the key. So I hope you guys learn one or two things in this video. If you learn a thing or two in this video, I would like you to like this video, share to your friends, follow this channel. So in the future, if you have a video like this, I'm going to be sharing with you guys. Peace.